Let's talk about a paper company that's no longer a paper company. We're talking about IP, International Paper. Chase will talk more. I think you have some data on that one. It's not a paper company longer. They too, though, here's another one. I feel like we're stuck on the short here. 12.4% they said is a short on IP, again, International Paper. 100% institutional owned. Here's a bad start. No PE ratio, which tells me last year, no earnings. Industry's at a PE ratio of 30.2. Price of sales, 0.9. That's the same as the industry. Price to book value, 3.6 versus 45.1. That is a positive. And price to cash flow, not good for International Paper. It's 17.3 versus 9.7. They do have a very good PEG ratio, 0.2 versus 6.1. Now, no earnings over the last year, even over the last 5 years, shows no earnings growth. However, sales were up 17.7% of last year, not quite as good as the industry, up 25.8. And they do have, from the analysts, a 5-year estimated growth in their earnings of 93.7%. So things look like they could get much better going forward. Now, you do get a nice dividend. The dividend is 4.1%, but keep in mind they have no earnings, so there's no payout ratio. So they could be actually, this is terrible, they could actually be borrowing money to pay that dividend. We don't like when that happens. Could be a dividend cut coming up as well. We do see on the balance sheet, current ratio 1.3 versus 1.7. That's okay. Debt to equity, not bad at all. 0.6, half the industry at 1.2. We see a net profit margin for International Paper of a minus 0.1%, but the industry is a positive 4.2. Return on equity also negative 0.1%. Free cash flow, it's a negative $118 million. Industry positive $338 million. I was kind of hoping that we'd find something here. Maybe you got something that can change my mind, but I'm not impressed at all what we're seeing here, Chase.
Yeah, current price here for International Paper Company, ticker symbol is IP, is $45.69. And the 52-week range here, it has fallen. I mean, the low is $43.27 and the high $60.36. Year to date, the stock is down about 15%. And you're right, it is interesting. They're not really a paper company anymore. I wonder if they should change the name to International Box Company or something instead. They completed a spinoff actually back in 2021 of a company by the name of Silvamo Corporation. That was their global printing paper business. I did go online too to check International Paper. They actually do like paper bags and stuff like that too. So they still have some paper business, but
they don't
when you're
create
like
the paper.
Or if you have like printer paper,
right.
They're not doing printer paper.
Okay.
You know, they're doing other paper products and then, you know, box solutions, corrugated boxes, things of that nature.
Yep.
So, you know, not necessarily, I think, what you would think of if you hear International Paper Company. I initially think of like the show The Office, like Dunder Mifflin. They're just selling the paper. Right. That's not what they're doing.
No.
But anyways, we look forward for International Paper. We go out here to December 2026. I see estimated earnings per share of $3.07. It gives us a target sell price of $50.96. Forward PE is around 15. But this is where it's interesting, and I'd have to understand more on the accounting of what's going on here. Another accounting oddity, you know, I talk about with Cal Maine, also International Paper, like this year earnings are estimated to grow 53%. 2026 are estimated to grow another 76%, while revenue is not estimated to grow that amount. This is kind of surprising, actually. 2025 revenue growth is estimated to grow about 39%, but next year just 2%. So a huge differential between earnings and sales growth. Don't know how that could be taking place. And back to your point about dividend safety, if those numbers come to fruition, we're getting earnings growth of 53 and then 76% the following years, that dividend should be safe.
And I don't know if the tariffs have any bearing on International Paper or not. I did notice what you said. 2025, the earnings are $1.74. They jumped to $3.07 2006. That's 12 analysts, but they're not very tight. The low estimate is $2.39. The high is $4.34. So I would not still recommend buying this dividend based on the future here. So it's just
even still the valuation doesn't make sense.
Yeah,
I mean, at 15 times earnings, not worth it. One interesting thing though is this continues to struggle. Even less analysts, but they're still looking for further growth in 2027. That would put you at around a 12 times multiple. So I mean, who knows? I mean, maybe at the beginning of next year, if things struggle, maybe this could be worthwhile. But right now, I'd be patient, kind of sit, watch it, but. Like I said, not worth it at this price.
Yeah, and the risk is, I think, pretty high. Doesn't mean it won't come through, but again, people chasing dividends like, oh, wow, this pays a 4.1% dividend. I think I'll jump in. You're jumping into a bag of snakes here. I could work out, but I would not. I'd put my money someplace else. So.
Yeah, I don't know if I'd go bag of snakes. I think this is not as risky as a lot of other things in the market, but I'm not giving my stamp of approval on that. I think you're right. There's a lot of other opportunities that
But
are
not
better,
as risky as a bag of snakes.
but not as risky as a bag of snakes. I think there's a lot of other stocks that fit that criteria.
I just like that saying, so I want to throw it out.